When I looked earlier, shares in Google were up 9% on news of the verdict in their antitrust case. So just to recap and where we're up to here for the moment, the verdict in terms of guilt was already in, and the US District Judge Amit Mitra, I think, had ruled that they had been guilty of maintaining an illegal monopoly in search. So the question only at this stage is, what are you going to do about that? The question is not whether they're doing such things. Now the question is how you go about responding to this. So instinctively, what you kind of want to do in this situation then is more or less try and reset things back to taking away any gains they've gotten from that ill-gotten monopoly position, basically, and leaving the rest of it intact. You want to try and adjust for the monopoly bit and leave the rest of the business as it would have been. It's pretty much impossible to do that exactly. So you might wonder whether they kind of overshoot or undershoot here. But when you think about the kind of benefits that they've had from this position, sort of two things come to mind, I guess. One is they have a big market share as a result of being a default search engine for a lot of people, partly by just straightforward choice of people automatically think and go to Google rather than Bing or DuckDuckGo or anywhere else, and partly because they put themselves in places where people can reach them, like on the iPhone and so on and so forth. So they benefit from this large position as a result of being, in terms of being a default option for a lot of people. And they also benefit from having huge amounts of data as a result of this that allows them to basically provide a better service to advertisers by saying, look, we know lots about people's searching and clicking and viewing tendencies here, and we can use that to put your ad in front of not just people in this giant marketplace of stuff, but people who are actually behaving in ways that indicate they might be interested in your product. And that's good for advertisers. That's very helpful. So you can generally charge them more for the privilege. Those are the two main kind of benefits. And the big threat, I guess, that people were talking about beforehand was that they might try and correct the first of those, that default status thing, by forcing them to sell off Chrome, effectively saying, well, you can't have this anymore. You've turned it into a monopoly thing. You've done it illegally, so you can't keep it. And the kind of headline news from this is that's not happening, at least not so far anyway. Who knows what the future brings, but pretty clearly, a judge has ruled that no, they will not be required to sell off Chrome or any of their other key assets. And it actually looks to me like they're not really doing anything about that first thing at all. As far as they're aware, the company does still get to keep paying Apple those kind of fairly large fees it was paying to be the default search engine on the iPhone. And you can argue a bit, and we have kind of speculated a bit here about whether that's a good thing for Apple, Google, or both. But whichever way you kind of look at it, before this kind of all began, Alphabet was pretty happy to be paying those things. They were more than okay with the idea of paying for default status here. So maintaining that, I don't think, is harmful to them. I mean, they'd probably rather not pay them and still be a default, but that's not the option here. So I think leaving that as it is, it looks like a big cost for Alphabet, and it looks like a big gain for Apple, and it probably is a big benefit for Apple that they're still allowed to sell this thing. And I think that's partly what the judge was thinking here, of Apple's allowed to sell its kind of ecosystem if it builds one to people. But Alphabet are allowed to keep paying. That remains the case as well. They are not required to sell off Chrome. Doesn't actually look like, and I think this is why the stock's going higher, they've done an awful lot about that first monopoly position at all, or the benefit of that first monopoly position at all. Whether that's right or wrong, don't really care for the moment. That's what it is. So on the second one, they have done something. And Google is going to be required to share data, specifically share data with competitors. That's not nothing. I mean, the likes of Bing and so on have a worse product than Google for a number of reasons. But one is because their targeting isn't as good. And the reason their targeting isn't as good is because they don't have the same data to use in training their search engine to target ads to people. And as far as I can see, it looks like they may well have that in the future. And as we know, Bing, which is owned by Microsoft, whatever you think of them, they're not slouches when it comes to AI and targeting and processing large amounts of data and so on. So you would expect them to be able to do that to improve Bing in some way or another. Exactly what that means in terms of Google's search engine is, I guess, the job for investors to figure out. Normally, what happens when you see a good competing product coming along is it's not necessarily, you might find you lose customers to the other one, but I don't see that as likely in this case. And more normally what you might see here is you kind of find pricing power gets chipped away a little bit, because You want to increase your pricing that you charge people, but to do that, you need a product that they have to stay with, or, well, at very least want to stay with, possibly have to. If Bing's targeting is as good as Google's, then there becomes a question of, well, can Google justify paying the same kind of, charging advertisers the same kind of premium here? Might be that Bing's pricing comes higher to meet them. Might be that Google still has a decent case to make as a result of just having more traffic than Bing does. So there's people coming through our door and we can direct you to them, the right ones more accurately, versus just, well, we can target them, but no one's actually clicking on our website. Might still have some clout about it, but I think that's the bit that kind of investors need to pay attention to here. That was, I guess, done to try and re-level the playing field in terms of data, and it, I think, probably does re-level the playing field in terms of data fairly well. So we will see what that means in the sort of near and slightly further ahead future. Obviously, I should point out here that Alphabet are appealing against this. I'm not sure that I think they're going to make huge amounts of progress with this, because I think they've actually got what, well, certainly the market thinks anyway, and they may well be right here, thinking this could be an awful lot worse. And it does appear to be the only major thing being levied at them is the requirement to share their data with competitors. They won't want to do that by any means, but given that you already have a verdict of maintaining an illegal monopoly, and this being pretty much the only thing they've been required to do, I'm not sure I see an appeal getting very far here, although why would you not appeal these kind of things? So my sense here was reasonably positive on this, but I sort of think a lot of investors were busy looking off the prospect of being forced to sell Chrome anyway. I wasn't. I saw that as a live risk, and we would see what happened. I did not believe, before all this, the line that some people were offering, which was, oh, they'll be better if they split things up, because when they split up all those oil companies, they all did better as a result. I think that's quite a bad argument. I think if Google was better off separated, they would have done it by now. But nonetheless, I mean, if they really think they're better off split, they can always sell it themselves if they want to. Turns out they don't, really, because they think that's a valuable asset worth keeping. So overall, I think I see the reasons for optimism here. I think there's quite a bit to think about in terms of data sharing and pricing power and where that leaves the firm's competitive position. Strangely, CF Nvidia last week that I was talking about here, I think with the amount the stock has moved, I think I like it more now than I did beforehand. And that kind of sounds weird because it's at a higher price than it was beforehand. But if you gave me a choice of saying, a week ago, saying buy it at the current price and you can take your chances on the outcome of that antitrust case, or I'll tell you the outcome of the antitrust case, it's going to be this, but you have to pay, as it were, today's price, I would have said, yeah, take the risk out the way for me and I'll pay the higher price for it, which tells you, I think, that I think positively of this in terms of what it's done for the stock and the company. Stock's at all-time highs as I look at this. But there we go. What did you think, Steve? You are an owner of this, of course.
Yes, so I got very close to ticking over to the double on this one. I got to about 98.26%. So I'm going to count that as a double. Every time I celebrate that, they normally drop by about 20% and never recover. So we'll have to see how that goes. So I think the major winners of this were the smartphone makers, Apple, Samsung, and Motorola. They've done really well out of this because Google essentially isn't allowed to have these kind of indefinite contracts in place where it automatically is the exclusive search engine provider for those phones. It's not allowed to do that anymore. It's not allowed to have the long-term deal in place. So it has to renegotiate with these smartphone and companies. So your Apples, your Samsungs, your Motorola's to some extent. We'll have to renegotiate with them every year, so annually. So I guess they'll be looking to try and squeeze more juice out of that. Google can still pay to be the default search engine on these things, which is almost as good as, Steve, because I can't imagine the vast majority of people go looking for a different search engine within their phones. There'll be people that do. Definitely there'll be people that don't want to use Google that go and switch over to do something else, but the vast majority of users will not. And I assume that this really is a bit of status quo for Google. It's going to be essentially, okay, we'll rip up that contract that says we're the only one, but yeah, we want to be the default one. and nobody's going to be able to match the money that Google puts forward. So what is really my major take on it? The issue I've got with the data sharing is I can't imagine that the Justice Department thought that strengthening Microsoft and weakening Google is exactly how they wanted this thing to go. You're basically just sort of passing the baton from one huge, like inassailable conglomerate to another, and making Microsoft stronger. It can't be what they want. This is not helping the situation really in any way, shape, or form. I saw that the CEO of DuckDuckGo came out and said that the new order fails to change. It fails to force the changes necessary to address Google's illegal behaviour, and says that as a result, consumers will continue to suffer. Now, to be honest with you, Steve, I don't know if people remember pre-Google, but that was suffering, was asking Jeeves to do stuff. And all the other multitude of services that were out at that point now were absolutely useless. Google won. Let's not get this wrong. This isn't all illegal practice that got Google to the top. Google got to the top because it was by far the best search engine. All the other search engines were absolutely useless at finding anything that you wanted, and Google found a way of making it work. Now, from that, they've built arguably a monopolistic business out the back of it. But they didn't build it just because somebody gave them 200 billion and said, you guys just go and corner the market and don't let anybody else in for a while. Let them all die off, and then we'll just figure it out. They won because they had the best product. So I think that's a load of crap, really. The other thing that I thought was a load of crap was just before this ruling, maybe the week before, Perplexity AI offered about 34.5 billion to buy Chrome from Google. Now, that was nothing other than a publicity stunt, because that offer, for starters, I don't know where they were going to get the money from, because, like I said, they're a startup. They are backed by Jeff Bezos. They are backed by NVIDIA. But I can't imagine that those guys are queuing up to give them 17 billion each to go buy Chrome. But the truth of the matter is, that's nowhere near enough money to buy Chrome. Chrome is the engine that feeds the data into Google's ad services products, which is a $200 billion a year product for Google. They're not looking to sell that, I would hazard a guess, for 34.5 billion. Now, it's difficult to value because we don't know the ins and outs of it exactly. But if you're willing to pay Apple 20 billion-ish, maybe more recently, for about 750 million users, and Chrome has 4 billion users, I would say you're at least, you've got to at least times that by 5, the 20 billion. So you've got to get to a kind of 100 billion before you get into the kind of value where Google might blink at the offer. And I don't think anyone's got that money, Steve. Nobody's got that money to buy that off Google. So yes, I thought the Perplexity AI thing was a publicity stunt, and I don't expect that to go ahead. Now, when I asked Gemini, bear in mind Gemini is a Google product, they said that Chrome's valuation to Google is somewhere in the region of $172 billion to $630 billion. Which sounds absurd, but actually, when you think about the size of this business and the value of what Chrome puts into Google and the Google services, 630 billion is like a quarter of the market cap. It's not a billion miles away, if you understand what I mean, from what you would expect. And now that is the realms of where nobody has the ability to buy it. But yeah, I just looked at all of this, Steve, and I just thought to myself, well, this looks to me like business as usual for Google. A big win for the corporate lawyers at Google, a big loss for all the small players who are trying to compete. A minor win for Apple, maybe a bit more than that. Definitely for the phone producers, they're going to do quite well out of this, I think. And potentially Microsoft, although Bing is still a terrible product, and I think people have been too badly burned by Bing, which I don't think is any better than Ask Jeeves today. So I wonder if people would go there. I think that's quite unlikely, Steve. I think people would be disappointed if Bing got pawned to the phone. Remember, the most Googled, the most searched thing on Bing is how to get Bing off your phone and get Google on it. So, and that hasn't changed for a long time, and I wouldn't expect it to change. So that was my general take. I thought Google have done okay out of this, and I thought the share price rise was fairly justified, Steve.
I agree the big winners were mostly big tech. I don't necessarily think that's a problem with the kind of reasoning here, in the sense of, so on the Apple payments, not the Apple payment, the payments to Apple thing, apparently the reasoning here was that a blanket ban on payments could cause quote unquote downstream harms. And I think that's true, that it could. One of the reasons I sold my stake in Apple around the time that this was kind of processing through was that I was wary about what happened if they weren't able to essentially rent out the iOS operating system to search engines and have them bid for these things. And I thought that was a risk that the payments from, in this case, Google, will go to zero. And that wasn't being reflected in the share price at the time. And I now don't necessarily think that, but the market has pushed that stock higher. And as you say, data sharing helps competitors, but their nearest competitors, such as there is one, is Bing, which is Microsoft. So it's not particularly helpful to smaller operations by any means. I think that said, if you look at this and kind of and take the names out of who it helps for the time being, what are you looking to do to try and correct monopolistic imbalances? Say, well, look, you can't keep all that data that you hide in. You have to share that with everybody else here because you got it illegally, effectively. So distribute that. Okay, fine. That happens to help Microsoft. Do we think there's a problem with you maintaining your status by paying somebody for being a default on an iPhone? No, not necessarily. Okay, so you can keep paying Apple in that case. It helps. The winners appear to be big tech across the board here. I mean, I think you're right about the point on exclusivity as a kind of finishing thought. Where this kind of conversation immediately went about a year ago, or so, it might be more than that, about 18 months ago or so now, when this was kind of going through the courts, was sort of thinking you can divide people looking at Bing on a smartphone into three buckets, I guess. One is the people who will, whatever app appears, if it's not Google that appears on there as their default search option, they will find a way to turn it into their search option. They will take away whatever is there, Bing or anything else, and replace it with Google, whether anyone pays Apple to put it anywhere, basically. And then there's the people who will probably just leave it how it is, whatever it is. So they'll leave Google if that's Google, and they'll leave Bing if it's Bing. And then there's a bunch of people who will remove Google if it's Google and replace that with anything else, Bing, DuckDuckGo, you choose. The last bucket is not empty, but I suspect it is vanishingly small of people who will work away from Google. I suspect what we described there was in order of highest to lowest number of people. Most people will go find Google if they haven't got it. Some people will probably say, I can't be bothered, I'll just use the thing in front of me, and if it happens to be Google, fine, and if not, I don't care. And then there's people who will say, I don't want to use it, I will go and find something else. So I strongly suspect there is something going for the company here, and as that kind of drives onwards, it probably should be helpful in data gathering from this point, I guess, but we will see going forward, I suppose. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.